What I will be doing in this video is showing you how you're supposed to be controlling your emotions when you're trading. And this is something that is very, very important because without controlling your emotions, you can have the best strategy in the world. But anyway, the moment that you let emotions in the trading game, what will happen is that you will completely mess up your risk management and strategy. So it's extremely important that you understand exactly how to control them and how to be a profitable trader that follows a clear rule-based strategy. So without further ado, let's get straight in the video. Now, if you're new to the channel and it's the first time that you see me, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms every single day. So I suggest you subscribe to the channel and I will see you in the video. In this video, I want to speak about patience. And when it comes to patience, the most important thing is to wait for all the confluences of the market to actually align. So if you want to be looking, let's say, for a buy, you want to make sure that the monthly time frame is bullish, that the weekly time frame is bullish, the daily time frame is bullish, that the 4-hour time frame is bullish on which you're looking for the entry, and that your setup is properly backed up by institutional buying. So let's say, for example, if you want to buy Euro USD, you want to make sure that institutions are actually buying Euro USD. And you can check this by looking the commitment of traders, which is what the biggest banks and institutions are doing in the market. So that is what it means to be patient, okay? To wait for all the rules of your strategy to actually be satisfied, both from a directional perspective and entry perspective. Now, us specifically, how are our strategies actually developed and how are they structured? Now, we take the direction from the monthly, weekly, and daily time frame. And we also check what we have from a COT perspective to confirm that the banks are actually looking at the same direction for the pair. So if we're looking for a long on the monthly, weekly, and daily, we want to make sure that institutions are actually buying that pair as well. And then when it comes to execution, we go down on the 4 hours. So patience for us means that all our rules need to be satisfied from a monthly, weekly, daily, and COT perspective. And all our rules must also be satisfied from an entry perspective on the 4-hour time frame. So we never, ever take a trade if all our rules are not satisfied. And that is why I say that the easiest way to become a patient trader is to actually have a rule-based strategy. Because if you have a rule-based strategy, it's very easy to be patient because you simply have to follow the list of rules that you can even print and have attached to your wall, because you just have to follow those rules. And that will immediately make you a patient trader. So if you're struggling with this, definitely you don't have a rule-based strategy. And speaking about patience, I also want to make a full breakdown of AUD CAD and show you why at the moment we have to be a little bit patient because the market could easily provide a setup in the near future. However, as we're speaking, it is not ready yet. So let's see what kind of opportunity we can be looking for on AUD CAD, considering that the market reacted perfectly to our previous analysis. And it's definitely time to make an update on the situation that currently we have on the pair. And as usual, I will keep the analysis very educational so that you will understand exactly what you have to be looking for when you're actually analyzing the market. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. So let's start from the monthly time frame. Now on the monthly time frame of AUD CAD, what do we have? Now on the monthly, we have a market that clearly has created a huge W formation. Now after a W formation in the market, what do you want to see? After a W, so an impulse, correction, lower low, and higher high, you want to see the market give you a move to the downside. Specifically, you want to see the market go for a retest of the previous resistance that we have here, which is now turned support. So after a W, you want to see a move to the downside to retest this previous resistance, which is now turned support. So immediately by looking at the monthly, we know that we have a downside target at this level, and we would like to see the market give us this move to the downside. So we expect a bearish trend to start developing from a monthly perspective. What we can also see is that this level is also a historical structure level for this market. In fact, if we extend our zone to the left, we can see that it was acting as very strong support here, preceding all this move to the upside, again acting as support here, preceding all this move to the upside, again acting as support here, broke to the downside, turned resistance, and the market rejected it to the downside. And now this level is support, and we can expect the market to go for a retest of this structure before creating a rejection to the upside. Going down on the weekly time frame, what we can see. Now on the weekly time frame, situation is quite clear. We have a market that created an impulse, a correction, and tried to go higher. Now we expected the market to start this week with a red candle. Why? What did we say in our previous analysis? Now, in our previous analysis, which you find linked in description, the first time that we spoke about AUD CAD was after the market had created this impulse and correction. And from here, we wanted to see the market give us a move to the downside and create a lower low. Then what did we say? We said after this retracement from here, we want to see the market again give us a move to the downside and create a lower low to complete this impulse correction and impulse pattern to the downside again. And that is exactly what the market did. So reacted to our two analysis perfectly, giving us exactly the moves that we wanted to see. And that is why we had a lot of reasons for which we wanted to see these moves. I obviously here will not make the full analysis of the situation that we had in the past, but I will link these two previous analyses in description so you can go and check them out for further reference and more free education on why we wanted to see exactly the moves that the market actually made, all the reasons behind these moves to the downside. And then what did we say with our last analysis, the one just before this one? We said the market clearly had created a W formation. Now, if you're asking yourself why from here the market made this move to the upside, the reason is very simple. Count the waves. 1, 2, 3, 4, 5. After 5 waves, you want to see the market create a higher high. That is what the market does most of the times. 5 waves and then creates a higher high. Or if it is creating 5 waves to the downside, it's 1, 2, 3, 4, 5, and then the market creates a lower low, creating an M formation. In this case, since it was to the downside, the market created a higher high and provided to us a W formation. Down, up, down, up. Now, after a W formation, as we said in the beginning of the video, we want to see the market give us a move to the downside to the previous resistance, now turned support. And in fact, that is exactly what the market did. And what did we say in our previous analysis? We said, from here, we want to see the market give us this move to the downside to go and test this previous resistance, now turn support. That is exactly what the market did. And I will link also this previous analysis in description. I will link all the previous analysis 1, 2, and 3. You will find them all linked below, and I really suggest you go and check them out. And that is exactly what the market gave us. And now that we have a market that on the monthly has a bearish W formation and we want to see it go lower, but on the daily has just completed the pattern at the previous resistance, which is now turned support. So from here we have daily support. So how do we approach a market in which we have a bearish target from the monthly? Because we have already identified that we have a bearish target at this level. However, on the daily, in between the market price at the moment and our downside target, there is daily support. How do we approach this kind of situation? Now, before I show you how you have to approach this kind of situations, being patient, let's go and see what we have from a COT perspective, so commitment of traders, which is what the biggest banks and institutions are currently doing in the market. Now, if we check the data for the AUD, we can see that institutions at the moment have more shorts than longs on the AUD. In fact, we can see that we have 55k shorts and 51k longs. And we were here with a positive net positions, meaning that we went from a situation where we had more longs than shorts with 4.2k net positions and 45k longs and 41k shorts to a situation where currently we have more shorts than longs, as we just said, 55k shorts and 51k longs. And with the last report, institutions added more shorts than longs. So AUD definitely has the possibility of becoming weaker. And on the CAD, what do we have? On the CAD, we can see that with the last report, institutions added 2k longs and closed 2.1k shorts. So CAD is definitely getting stronger because institutions are buying it And that is why we definitely expected this move to the downside, because if CAD gets strong, you expect AUD-CAD and CAD pairs to make move to the downside. That is exactly what the market did, following perfectly our analysis. So we do have the possibility to see the market go lower. However, do we have good probabilities in selling a market that is at daily support? Obviously not. We have very bad probabilities because we would be selling at daily support, which is never a good idea. So how do we approach this kind of situation? As usual, we have to be reactive and not predictive. So what do we know? We know that if a support level breaks to the downside, it will be turned resistance. So if the market will actually show us a break to the downside from this level, at that point, what we will be doing after the break on the retest of the structure, all this previous resistance, which is now turned support, will be turned again resistance at this area. And after the break, on the retest of this structure, this is exactly where, with students, we will be monitoring price action from a 4-hour perspective. Because as we said earlier, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So after the break on the retest of the level, we will be monitoring price action with students on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside at that point to go and complete our monthly pattern. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.